Well, folks, I hope you are ready for an absolutely insane week in the market. I'm going to take you through exactly what's going on here, my expectations around what is going to happen this week, okay? The next 4 or 5 days are everything for this market, so I want to show you everything. I have some big concerns, I'm going to be completely honest, about this week, specifically starting around Wednesday. Some major concerns that I have to express in this video and kind of show you guys exactly what's going on and get you prepped for that, okay? There's some exciting opportunities as you see this week as well, but this is going to be an insane week. I'm going to try to keep you guys up to date as the whole week goes on, and this video is going to be obviously an important one to prep you for what's about to happen here. So I appreciate each and every one of you for joining as always, and let's just get straight into it, guys. Very busy video here today. This took a long time to prep all this for you guys. I hope you enjoy it, and I appreciate each and every one of you that subscribe to the channel. Okay, now to catch you up to date on where the market's at right now. Okay, the S&P 500 is down about 22% from its highs. The Nasdaq's down about 32% from its highs, and the Russell's down about 30% from its highs. Now, what's very important about that is we have come back quite considerably from just the lows we were at a little over a week ago, about a week and a half ago, roughly, okay, where the Nasdaq was down almost 38% at the lows. This was Thursday of last week, okay, or 2 weeks ago. Thursday of 2 weeks ago, almost 38% down, so we're down 32%, so we've come back a pretty decent amount, right? Russell's up about 4% since then, 4 percentage points, and the S&P 500 is up about 5.5 percentage points since that time, okay? And the Dow's actually up over 7 percentage points since that time. So we've made good progress. The rally has started, right? But like I said, in regards to this rally, I have some real concerns that I'm going to share with you in this video, and some very important things to show you. But it has been a bit of a comeback so far, at least. Okay. Now, right off the bat on Monday, you get an important company reporting after the bell. Okay, that's Logitech. So Logitech's a stock that was a very exciting stock to be in 2020 and 2021. The reason being is everybody was forced to be home. Computer equipment sales went crazy. I don't care if you're talking about things like microphones for your computer, an external microphone, external cameras, keyboards, a new mouse for your computer, all those sorts of things. I mean, it was incredible. And Logitech was maybe the most direct beneficiary of any public company out there, okay? But what's happened over 2022 is the world's opened back up, offices have opened back up, computer sales, all those sorts of things have tanked massively, okay? And right along with it, guess what has happened? Logitech has tanked right down with it. And this stock actually hit a low about a week ago of $41 from $90 a share. It's down considerably. P/E ratio is 13.5 on this company. It's over a 2% dividend yield on this stock, okay? Now, I've got to say, Logitech is actually a buy right now. But with that being said, there's a way better stock that's going to give you a way better ROI, in my personal opinion, over the next year or two. And when I look at Logitech, it's at about a 12 forward PE. They've got one more roughly rough quarter to kind of comp against. But I'm actually expecting a pretty good 2023 for Logitech. Not a stock I personally own, but I think a way better stock that's going to way outperform is actually Corsair Gaming. Now, Corsair Gaming and Logitech, they kind of go up together and they kind of go down together. But one of these stocks is always going to outperform the other or underperform the other, right? Corsair, I look at and I think it's going to destroy Logitech in terms of earnings over 2023, essentially, and in terms of its stock price performance. Gaming, in my opinion, is going to be incredibly strong in 2023. And it's a perfect scenario because I think gaming is going to be incredibly strong. I think the new COD game is going to be the most popular game we've had in years, to be quite honest. I think that's going to produce a very great gaming environment coming off of incredibly weak numbers, a P/E ratio on Corsair of under 9, a price to sales ratio of under 1 on the stock. So I think this one is going to move up more than Logitech. I think both will have a good 2023 in terms of stock prices. It's just Corsair is going to tear it up, in my opinion. So that covers that on Monday. UPS reports before the bell on Tuesday. Extremely important. Everybody in the stock market looks at this one, okay? And I mean everybody. It's not like this is not looked at. This is one of the most important companies you can ever look at if you want to understand how the global economy is doing. UPS is a global company, right? And when it comes to UPS, the stock has performed roughly in line with the market, right? At about a 22% downward number there. P ratio about 13. The way to think about this is usually if UPS is trading at under a 12.5 P ratio, usually you're getting very good pricing on that. It's usually a buy, right? And kind of throw in the filing cabinet. If you're trading 15 plus P ratio, ratio on UPS, you're usually getting into slightly overvalued. If you're usually getting anywhere close to a 20 P ratio, usually stay away from UPS at anywhere around there roughly, okay? And so the problem with UPS here is what we heard last month in regards to FedEx is they said demand weak. They're talking about cost-cutting measures, and basically it's just not exciting at all, and actually pretty doomsday we got from FedEx, right? So now we get in this UPS earnings, and everybody's going to be looking at UPS, and they're like, what's going to happen here? Now, like I spoke about with Logitech and Corsair, those two kind of move together up or down. Same exact thing with UPS and FedEx. But the concern is UPS about to report a very disappointing number just like FedEx? If they don't, then that means it's more of FedEx-specific problem and not more of a overall global macroeconomic problem. If UPS reports troubling numbers, UPS and FedEx, they're the ones that are shipping all these products all over the globe, obviously, right? So if both of them report troubling numbers, then we know we have a bigger issue there, right? Which is a massive kind of slowdown in the overall economy, which affects obviously everything pretty much at that point in time, right? So that one's going to move the market on Tuesday, right? Mr. Softy reports after the bell. If you want to talk about absolute insanity, I'm telling you, Tuesday after the bell is going to be insane. It's the craziest day you might ever see in terms of an earnings day for stocks that matter, okay? Mr. Softy reports after the bell Tuesday, $1.8 trillion market cap on this company. Stocks roughly, if you look at the performance, it's basically in between what the Nasdaq's down and what the S&P 500's down, which is kind of what you should expect from a stock like Mr. Softy, to be honest. No, this stock's trading at fair value. Fair value for Microsoft's about a 25 PE. That's where it's trading at. If you're going over 30, you're getting a little rich on Microsoft. If you go over 35, and then you're getting into overvalued territory. If you can get ever under 20 for Mr. Softy, that's where you're really talking about getting a steal deal of a stock. So right now it's at fair value. So I like that setup going into earnings. It hasn't bounced back in a massive way prior to earnings, and I think their numbers are going to be just fine. I think, when it comes to small businesses, mid-sized businesses, and even large companies, they have to stay signed up for Microsoft's suite of products, bottom line. And on top of that, their cloud business, Azure, I can never pronounce it right, it's just consistent, great growth business for them as well, right? And their advertising business is ramping up. And did you know who is the main partner that Netflix has for their new advertising business, right? If you didn't know, Netflix has their new advertising stream that's about to start up here. And who's their main partner to work out those deals? Microsoft, Mr. Softy. Even when I found that out, I was like, oh, that's kind of surprising. I went with Microsoft. But yeah, so that's just another, let's call it growth lever for Microsoft over the coming years. Activision Blizzard deal going through. COD is going to be crazy over this next year, in my opinion. Those sales are going to be ridiculous. So I think Microsoft's actually in a pretty good spot, and I wouldn't be surprised if that one moves up in a pretty considerable way on earnings, essentially. Now, what I will say about Microsoft is if that does move down, this guy right here, for the first time in his life, might actually buy Microsoft. Might actually do it if it moves down, and that's something I've never owned that stock before. So that would be definitely a different situation for me. But just a consistent business model, I think they're going to be just fine. Google McDougal, very interesting dynamic for Google McDougal. So they report after the bell on Tuesday. Now this stock's been hit hard. Down 30%, hasn't moved up, in a strong way going into earnings. I've actually started buying the stock very recently over the past few weeks. I hope it goes down in earnings. I don't think it's probably going to go down in earnings, I'll be honest. I think if anything, it's probably going to move up. It's going into earnings very undervalued. It's under a 20p ratio, which if you can ever get Google under a 20p ratio, it's very good value. Trading at a $1.3 trillion market cap right now for good old Google McDougal. Now, when it comes to Google, okay, the one thing that makes me concerned about this stock is I look at the P ratio under 20. It's at like an 18. I'm like, that's so undervalued. But here's the issue. Meta's trading at 10, a 10 P ratio, which is ridiculous. It's just laughable. Okay, it should be trading at a minimum of 20, but likely like a 25 or a 30. So seeing that Meta's at 10, it doesn't mean that Google can't go down to 10 or 14 or 15 or something like that, right? And so that's just kind of something I put in the back of my mind, and I'm like, it's so ridiculous this is trading at 18, but then you look at Meta at 10, and it's like, Who's to say that can't happen, right? So this is just something I think about there in regards to that one. And, I think Google is going to continue to put up good numbers. It's just how much does Wall Street like those numbers? Now, if you ask me, what's a stock, if I had to short a stock for the next 12 months, what would that stock be? It's actually a stock you're looking at right in front of you right now, okay? Enphase Energy. I think this one's going to get into some real trouble in 2023, and maybe it even starts this quarter. We'll see. But here's the issue with this stock, okay? First off, the company's done an amazing job executing on their business model, right? But I see a lot of concerns adding up here. One, the stock's performed amazing this entire year, 36%, okay? The stock is at an incredibly rich valuation, price to sales ratio of nearly 20 for a price to sales, okay, 175 PE ratio and a 75 price to book ratio, okay? So the valuation on Enphase is insane. They reported earnings after the bell on Tuesday. I think there's going to be a major slowdown in new homes being built, and I think that will end up hitting Enphase's numbers come 2023. I think at the end of the day, it'll make for a situation where there's going to be less production of their product. And on top of that, I think no one's going to want to put any money into their home at all for, the next 12 to 24 months. So for that reason, I actually think Enphase could have some troubling numbers in 2023, some troubling guidance. And therefore, that sets the stock up in a very tough dynamic, because even if their numbers are still good and even if they're still showing growth, you can't have it where it's not showing ridiculous growth because it's been priced like that, right? We've seen that play out with Tesla. Tesla's a perfect example, right? Still phenomenal growth for Tesla this year. It's been incredible. What's the stock price done? It's gone down 40-something percent, right? 40-something percent, although the numbers and the growth have been extreme, right? But it was priced very, very rich going into this year. So I see the same dynamic playing out in Enphase, but in 2023, where they could still put up decent growth, but actually the stock will fall considerably throughout the year, essentially. So, if you're a long-term buyer of that stock and you're a big believer of Enphase over the long term, then, you might get a decent buying opportunity for the next 12 to 18 months, but I'm just not a believer in that one. Not in this sort of market with that sort of valuation and the troubles I see kind of coming in the real estate market over the next 12 to 24 months. I don't think it's going to be an ideal dynamic for Enphase, okay? After the bell also on Tuesday, you get Visa. I mean, if it wasn't enough, we've got so many important companies reporting after the bell Tuesday. It's ridiculous. Visa, you're looking at the company that, if all those swipes going through, they just make this little transaction fee on all those little swipes, right? And it's a beautiful business model. It's only down 14%. It's trading roughly where it should be trading at about a 30 PE ratio. That's fair value, honestly, for these sorts of stocks. You could say maybe it's a little on the richer end, but at the end of the day, their business model is just so consistent. They make that little transaction fee every time people swipe their cards, right? And so, I can't really hate on it. Probably not going to be a huge move either way on Visa in regards to their earnings, but that's another one that you're going to want to pay attention to understand how the global economy is doing, especially the U.S. economy. Chipotle. If they told me there's another stock that I had to short for the next 12 months, it would actually be Chipotle. And Chipotle is a very dangerous stock to short because, a lot of people love to own Chipotle stock and it usually performs great. A lot of problems here with Chipotle, okay? It's trading at a 5 plus price to sales ratio, extremely rich for basically, a quick serve restaurant, right? Stock prices perform very, very well, down only 8%. I wish my stocks were only down 8% this year. I would take that in a heartbeat. That's amazing, okay? In a year like this, down 8%, any day of the week. It's trading at a 58 P ratio for Chipotle, okay? There's so many dynamics that are working against Chipotle on top of rich valuation, the fact that the stocks perform very well. One is wages are a big problem for Chipotle and everybody in this industry. California's minimum wage going to $22 an hour. Many other states' minimum wages are going up considerably in 23. Plus, there's a huge problem. And if you're trying to get anybody to work in the restaurant industry, you need to pay top dollar right now because those jobs are so plentiful right now, right? And unemployment's very low that they're getting, anybody in the restaurant industry is getting sliced and diced right now. Very, very tough business. If unemployment starts to rise, let's say at some point in 2023, it'll get easier for Chipotle and for other companies as you get into 2024, but it is not a good dynamic for them. Also, food price inflation is a major problem for all these companies. Third, they've gone up on price, but the more and more you go up on price, right? And the more that Chipotle burrito is all of a sudden costing you $11 and $12 and $13 and $14, right? The more consumers like, It's too dang expensive. It's like I might as well go out to an actual like restaurant eat now at this point in time because it's getting so dang expensive. It used to be, you used to think like I'm going to go get a Chipotle burrito. It's going to cost me $6 or $7. That used to be the thought process, right? Now most people are thinking, dang, I want to go get a Chipotle burrito. It's going to be like 12, 13, 14. I saw somebody, New York City, inside the private stock group, I think it was, had posted something about that, they got Chipotle in New York City and it was something like $18. I was like, what? What are we talking about here, man? Just go at home and flip some flapjacks, man, and eat a little cheaper than that and get some chef and, $4.99 special right there, baby. Plant-based burrito bowl, and that's all you need in life. So, in my opinion, Chipotle is going to be in a tough spot. Maybe we start to see it play out in this current quarter, or if we don't, we'll see it play out in 2023. $43 billion. That one has, in my opinion, a long way to fall there, okay? Texas Instruments. So they report Tuesday after the bell. The $145 billion market cap, just the amount of important companies reporting Tuesday is insane after the bell, okay? Stocks performed decent this year, down only 16%. That's a win. Unfortunately, I think it probably has some downside here. P ratio is actually a little rich for Texas Instruments, trading at about 17.5. These sorts of semiconductor companies usually should expect them to be in the 12 to 15 range and maybe even 10 to 15. So it's on the upper end, right? We know the semiconductor space is in a very, very tough spot and likely will continue to be for a bit here. And so that's a tough dynamic for Texas Instruments to be in. And so if I had to guess, that one's probably going to pull down and probably will pull down the entire semiconductor industry. Now, if it moves up in any considerable way on earnings, obviously it's going to pull the entire semiconductor stocks along with it on Wednesday, okay? Meta. All eyes are on Meta on Wednesday, okay? There's a lot of different companies reporting on Wednesday. This is the only one that everybody's attention is going to be on for Wednesday, okay? Now, I'll tell you if I'm going to be buying the stock prior to earnings. It's trading at a 10P ratio right now. The stock's been devastated. We all know that, right? It's down 61% year to date. It's been incredible. They're wrong. They are 100% wrong in regards to the stock. And it will be the best performer of big tech-related stocks over the next 2 to 3 years. And there's not even like 1% doubt in my mind about that. When it comes to Meta, what I'm seeing play out now is IG Reels are starting to take off in a very significant way. And what Meta always does so phenomenal is it's a similar strategy to essentially like, if you're a great football coach, a defensive coordinator, something like that, you take away the other team's best player. And what Meta always does, they take away whatever their competition is, they take away their best feature, they add it onto their platform, and basically they make it just as good, if not better. They did this with a ton of companies in the past. The most notable was Snapchat when they stole basically Instagram stories, started, and they took the Snapchat story idea, where Snapchat at that time was a growth beast, and right after IG took away that and started implementing that and did it on a high level, Snapchat's growth was never the same after that. Snapchat's stock price was never the same after that. And they did it to perfection. They're doing the same exact thing with TikTok right now with IG Reels, and that has taken off in a massive way. Now, the interesting thing they do is they make sure they perfect that, they get the algorithm perfect, and then a quarter or two after, they start the monetization. And that's when you start ramping up the dollars, and all these advertisers all of a sudden have this new way of advertising that they think is beautiful, and all of a sudden, boom, 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 up goes revenue. So in terms of money hitting to the company's income statement, that's going to happen in 23 for IG Reels. But right now, it's just them perfecting the algorithms, getting them perfect to feed everybody the stuff that they want to see, that they're going to share with other friends and family members and things like that. And, so we'll start to see that in the numbers, and it's taken off in a massive, massive way. Now, I will likely be buying the stock into earnings. I'll likely be buying it after earnings. The deal with me and Meta, this is a buy for me all the way to 200. To 200. So for me with Meta, I'm not going to be done buying this stock anytime soon. It doesn't matter if it's 160, 110, 130, 140, 180, 100. It doesn't matter to me. At the end of the day, this is a huge buy. It's stealing money, in my opinion. It's the most stealing money you can possibly get in the stock market right now. By a lot, as far as the risk reward goes, okay? So I'll be buying that into earnings, after earnings, it doesn't matter, okay? Shopify, I'm very conflicted on Shopify. This is a stock I started buying recently. In terms of how I think the stock's going to do, I'm very confused myself about, how the stock is going to perform after these earnings. And this is reporting Thursday before the bell. And the reason being is Shopify is the ultimate, risk on stock. And if you're going risk on the market, get ready to see Shop fly like you've never seen it fly before. And we've seen some pretty, epic moves. But as long as the market stays in a relatively risk-off scenario, Shopify is not that stock, right? So for me, if this one flies on earnings, we're going full on risk on in the market again, and people are going to get very, very excited, right? If this one doesn't move, then likely people. So I think everybody should have Shopify on their watch list, regardless if you care about owning that stock, you ever want to buy it or you don't. I think you should have it on your watch list and watch how that stock moves on Thursday. If it moves down, the market is still in general kind of like we're not ready to take real risk right now. Maybe we can have this bear market rally we have going on right now, but we're not really ready to go risk on. If you see that make a significant move up, Wall Street's all of a sudden starting to look at things a little differently, and they're like, you know what? I think we got to start getting in these stocks. And that will make for a really crazy November and December in the market. I can tell you that much if you see a stock like Shop move up in a considerable way there, okay? MasterCard reports Thursday before the bell. Very similar situation to a Visa here. Everybody's going to be looking at that just to see how numbers are, see how the economy's doing. Almost a $300 billion market cap here. Stock's trading at a 30p ratio, roughly where it should. Stock's down about 18%. So definitely an important stock to just kind of pay attention to what's going on with their numbers. McDonald's, very tempted to buy puts on McDonald's or short this stock, actually. So when it comes to McDonald's, they're reporting earnings on Thursday before the bell also. But when it comes to McDonald's, this stock's done amazing. Why has it done amazing? Is it they're running their business so great that everybody's like, I got to buy McDonald's stock because they're doing so amazing. Look at how well they run their business. Absolutely not. The reason that stock's down only 5% this year, which is absolutely epic, that's a win. Biggest W in the world. That being down 5% in 2022, biggest W in the world, okay? The reason that's done good is because that's where people like to park money in uncertain times, okay? When you're going risk on in the market, no one wants to hold McDonald's or cares about McDonald's. But when you're in a full-on risk-off market, what does everybody funnel their money? Into McDonald's stock, into Walmart stock, Coca-Cola stocks like that, right? Because that's where they feel, I'm safe here, all right? And that's why the stock's performing very well. Here's the issue. Everybody that wanted to do that has already done that now at this point in time. There's not like there's a bunch of money sitting out there like, I got to rotate to McDonald's now. No, okay? If anything, it's rotate out of McDonald's now at this point, okay? The other issue for McDonald's is this stock has been trading up very nicely going into earnings. I don't like it if a stock I own is trading up major into earnings. That sets you up for big downside there, okay? And it's trading at a 31p ratio, which is laughable. And all the issues I just told you about Chipotle a few minutes ago, all those same issues are massive issues for McDonald's, but actually probably even bigger, okay? So that's a concern. Obviously, Russia business, rough. They had to leave, the Russia business, they had to just completely, get out of that. Europe in general is weak for them. So, if anything, I expect downside in good old McDonald's there. Caterpillar, they report Thursday before the bell. Thursday, it's another huge day, okay? But there's going to be two massive stocks after the bell on Thursday. For Caterpillar, here's the deal. They got more pain. They got a lot of pain in 2023. The stock's held up pretty decent this year. Was the stock held up pretty decent this year? Well, the reason the stock has held up pretty decent this year, in particular, right, is because all the construction sales have still been good this year, right? Because all these projects that were announced 2020, 2021, and all the homes being built, that's all going on right now, right? The issue is the credit market has contracted in a massive way. So what you're not going to have is a bunch of new projects be announced in 23 and 24, which is going to create like 2 years of downside for Caterpillar. Doesn't mean for both those years the stock price will move down, but it's going to cause 2 years of weakness in their business, 2023 and 2024. Because even if things get a little better as 23 goes along, right, there's still going to be major concerns. Interest rates are still going to be relatively high, which means any big construction projects are going to be kind of put off at that point in time, right? I think the housing market is going to be incredibly weak for quite a while, okay? Quite a while, which means a lot of the new developments and communities, if you live in an area like I do in Vegas, right, or even my other house in Phoenix, I see all the land getting cleared and stuff over the past number of years. And what do you see on those job sites? Incredible amounts of Caterpillar equipment. Incredible amounts, right? Here's the deal. If you're a home builder, you're battening up the hatches. You're ready for a very tough next couple years. With interest rates as high as they are, no one's going to be buying houses. It's going to be tough for for the next few years in the housing market, right? Unless magically the 30-year mortgage goes back down to 2 or 3%. If that happens, that's a whole different dynamic, right? But if you're talking about 7% plus, people aren't going to be buying houses out there and bidding up new houses. That's just not the way it is. And never mind, I did a reaction on my new channel recently, right, where they're talking about 10% mortgage rates in February. That's epic. If that happens, okay. So Caterpillar, and here's the other problem. Their China business, China's way overdeveloped right now, and their real estate market's a mess, in their construction market in general. So don't expect China to come save the day in 2023 for Caterpillar. Maybe 2024, 2025, but not in 2023. Europe's a mess right now. Who wants to do a big project in Europe over the next couple of years? So all that bodes very poor for Caterpillar. I think their numbers are going to be extremely troubling for 2023 there, okay? More pain ahead. Thursday, all eyes are on 2 stocks. Well, this is one of them right in front of you, Apple, okay? Now, as much as I think the Apple Watch numbers are going to be strong, services is going to be okay, things like that, none of that matters for the next 2 quarters. What everybody wants to know, and what everybody's going to be paying attention to for the next 2 quarters with Apple, iPhone 14. It's all that matters for the stock for the next 2 quarters. After that, it'll become a services story again and wearables and those sorts of things. But for this next 2 quarters, this one and the next one, iPhone 14 is everything, okay? Now, in regards to Apple, he's trading on the richer end from where it usually trades at going into earnings, so do keep that in mind. But I've kept track of how iPhone sales are doing essentially ever since the new iPhone came out. And what I've consistently seen is iPhone 14 looks like it's not selling very well. You can get them easily. The iPhone 14 Pro and Pro Max look like the ones that are selling well, and those have always been, now it's down to about a 2-week, roughly around a 2 to 3 week span to get your new iPhone Pro or Pro Max. But a lot of times it's been like more toward like 3 to 4 weeks or 4 to 5 weeks in regards to that. So it looks to me, this is going to cause a lot of confusion because it looks like Pro demand is strong. It looks like 14 regulars are very, very weak. So overall, it's going to cause a very confusing dynamic on earnings, and we'll hear what Tim Cook. Now, from what I've always seen with Tim Cook, he usually tries to sugarcoat things a little bit, and he usually tries to give the, I don't want to say hype things out. He just likes to give a glass half full perspective of Apple. Every single earnings, even when they might have some troubling numbers. Is he going to do that this time? I'm not sure. Apple's the biggest, most important stock to the stock market. I wouldn't be surprised if Tim Cook wants to play a little high-level chess here and maybe say, I want to come out, I want to sound bad. First off, Apple would not, Tim Cook's job's secure. So even if Apple stock went down 10%, his job is well secure. They could buy back a lot of shares for a lot cheaper, right? Also, think about this for a moment. If you're talking about the Fed paying attention to companies, who are they going to pay attention to? The biggest companies in the world. Who's the biggest company in the world? Apple. So who do you think they're going to pay attention to if they were very worried, right? It's going to be Apple. So if there was ever a time where Tim Cook could maybe look at the glass half empty instead of half full, this might be that one quarter. And if we get that, then obviously Apple stock will push down in quite a considerable way if that's a situation that plays out there, okay? Amazon's the other big dog that reports the same day, right? Amazon, $1.2 trillion market cap, down about 30% roughly this year. Why is Amazon down only 29% and not 49%? There's only 2 reasons why the stock is not down much more than it is, okay? If this was just an e-commerce company, the stock would be down 50% plus. But because of Amazon Web Services and their advertising business, that is why the stock is only down about 30% so far this year, okay? If it wasn't for those 2 businesses, I can tell you the stock would be down so much more, it's not even funny, okay? Now, Amazon, in regards to this one, it looks very richly priced going in these earnings, right? It's trading at 100 plus P ratio, but the thing you got to understand about Amazon, much cheaper forward P, it's at about a 50, which is roughly in line what you usually expect to pay for Amazon. We know they've had 2 Prime days recently. We might get more data out of those. I don't have a strong opinion on Amazon. Personally, selfishly, I am hoping the stock price goes down. I just started buying a few Amazon shares recently, and I would love to build that into a nice size position. So my hope is the stock actually goes down in the short term and, maybe goes to some sort of newer lows or something like that, right? If you could get Amazon to report some troubling numbers and guidance, simultaneously with Apple report troubling numbers or guidance, and not the most exciting conference calls, that's where you could talk about Friday setting up for a huge downward day in a market. I mean, absolutely massive downward day. Now, in regards to Friday specifically in the market, oh, by the way, Amazon, I just want to show you guys this. They're expected to do almost $600 billion in 2023. Don't be surprised if Amazon moves up very nicely in 2023, especially if there's any weakness in the stock going for the remainder of the year. You know, whenever a stock usually has a reacceleration of growth, usually their stock does pretty darn well in that year from what I found over time, okay? In regards to Friday, before the bell, Chevron and Exxon are both reporting. Massive oil and gas giants, as everybody knows, right? But here's the deal. Those numbers are going to be good for those companies, right? Everybody knows that already. Everybody knows that already, right? Everybody knows that Chevron numbers are going to be good, Exxon numbers. So you're not going to get any surprise there. So, you know, in my opinion, those conference calls from Amazon or in Apple are really going to take the market to where it's going on Friday. And if I had to guess, it will be some sort of massive move down on Friday. Just my guess, because I think, you know, if anything, those folks want to speak a little troubling. Because think about it. If you're Apple, you come out, you speak, you know, that you're concerned about this, you're concerned about that, very scared. Then you set up expectations to be very low for obviously the stock in 2023. Like I spoke about before, you get to buy back shares for a cheaper price. You get to send a message to the Fed about, hey, you guys might be wrecking the economy here. You guys wreck the economy. Ain't going to be as many people buying iPhones. And as many people buying iPhones, this means there's not going to be as much people spending money at the restaurants. It means unemployment is going to go up in a massive way. Then you guys are going to have a whole new mess to clean up, right? Which the Fed's trying to clean up this inflation mess that they are definitely part of, right? Are they ready to clean up in the next mess, which could be a massive recession that they have to clean up, right? Whew. So if there's ever a quarter where, you know, a company like Apple and Amazon, two of the most important companies in the world, could send a message, could be on Thursday after the bell, okay? Now, as far as me, I'm very concerned about the market, specifically kind of the 27th, 28th, and 31st there. Maybe a little bit on the 26th. Those are kind of my concerns about the market this given week. You know, it's really going to come down to that conference call, man. And if we talk about if we talk about that scenario where Apple and Amazon have rough conference calls, very concerning, you'll get the market to move down big on the 28th. You'll get it to move down big in another scary day, no pun intended, on Halloween, and another scary day kind of flush out there on that Tuesday, which is the 1st of November. And then you could start the rally on again, which is interesting. It would be funny if we kind of had a tanking in the back half of this week going into the following week, because what the conventional wisdom will all of a sudden become on Wall Street is, see, that was just a bear market rally. The rally's over now at this point in time. Look at Apple's going down, Amazon's going down, the market's going down. Look at over the past 2-3 trading days, and everybody will write off the November, December rally, all to still get that rally coming right out of their face. They just won't realize it, essentially, okay? So, my gosh, guys, I'm going to keep you up to date on all this week. It's going to be a very, very busy week in the market, very busy week on the channel and on the new reaction channel, which if you haven't checked that out, by the way, Jeremy Lefebvre Makes Money, check it out. I appreciate everybody that's subscribed over there. We're already over 17,000 subscribers now at this point in time, which is absolutely incredible to me that we've been growing that fast. Thank you for everybody that's subscribed over there on the reaction channel. Also, if you're looking to join my private stock group this week, it's a pretty epic week to join, man. And you want access to the Discord chat, you want access to all my course curriculums, everything like that, and chat about all the different stocks with everybody, get access to all the different Palantir Discord chat, Tesla Discord chat, Meta, AMD, NVIDIA, all those. Check out the pinned comment down there, and you can apply with the pinned comment down there. Much love as always, and have a great day.